The crypto market is looking for a reason to explode to the upside. The problem is that we just haven't had the right catalysts yet. The good news is that I believe that two major catalysts are coming our way in the very near term. And in this video, I'm going to break down what those are and how you can keep track of them at home. If that sounds good to you, hit the like button, give me 10 minutes of your time, and I can help you become a better investor in this crypto bull run. The two catalysts that I'm talking about are the central bank rate cutting cycle and the emerging business cycle uptick, which I still do think is in front of us. When central banks cut rates, what they're essentially doing is allowing for more liquidity to come into markets. They're uncrimping the hose, so to speak, and allowing money to move more freely. This is going to pull investors away from safer assets and into riskier ones as financial conditions become more favorable for risk assets, such as crypto and the rest of the altcoin market. It's safe to say that Bitcoin is no longer that risky of an asset. It still has volatility to it, but I believe global investors and global Wall Street are starting to recognize it as a safe monetary inflation hedge. But the rest of the altcoin market is still considered pretty risky. As interest rates come down, these riskier assets become more desirable because investors want to go further along on the risk curve. We also know that more liquidity drives up asset prices. Have a look at this chart right here, and I think it's one you've probably seen before. As M2 money supply rises, the total crypto market cap also rises as a result. This is because dollars are becoming worth less of themselves as more get printed into circulation, and then it's also because these assets catch a bid as more money frees up in the financial system. Now, what's most important for you to understand is that this is happening all around the world. Central banks globally are cutting rates. We're in the rate cutting cycle. This is the time to go risk on. If you have a look at this chart, you can see that in green, these are the rate cuts, and in red, these are the rate hikes. Now, what you're noticing is that there's a pattern here. There is a pattern of rate cutting and rate hiking. Understanding this is vital to you as an investor to understand when it's time to put money into markets and when it's time to take money out. Understanding that there is a cycle, an ebb and flow, and a rhythm to markets allows you to essentially forecast asset prices. If you can pay attention to central banks and what they're communicating and what they're getting ready to do, then you can essentially understand where risk assets are going to go. And don't worry, if you don't have time to keep up with them, subscribe to this channel, and I will definitely be keeping you up to date with what's going on with central banks around the world. And eventually there's going to come a time where I come on this channel and tell you that it's time to sell. But that time is not now, and I don't think it's anytime soon. Now, the big question these days is, when is the US going to cut rates? When is Powell going to cut rates? Is Trump going to fire Powell? Are we going to have a new Fed chair? Here's what I think is going to happen there. Powell has signaled consistently to the markets that they need to see what tariffs do to inflation. They need to figure out to what extent tariffs are going to be inflationary. Tariffs will bring some inflation, yes. It's a one-time price shock, but that's it. It's going to increase prices once, and then it's going to be done. It's not going to contribute durably to inflation, but the Fed needs to know that for sure. They need to act on the data that's in front of them, not what they think is going to happen down the road. Powell has told us consistently that he needs to see data from the summer months, June, July, August, before they can cut. That puts us perfectly in time for September. And I believe we're going to get a rate cut in September. I wouldn't look for a rate cut in July. I would honestly just take that out of your head. You'll sleep better at night. And even if Powell doesn't cut in September, a new Fed chair is going to get appointed in May of 2026. And markets are already beginning to look forward to this. This chart right here is showing you the evolving Fed policy rate expectations. Powell Fed expected to stay at about 4% for the time being through June and July of 2025. But look at the new Fed expectations. This is taking us through to December of 2026, and they're already anticipating 60 basis points of cuts. Trump is going to appoint an Uber dove, meaning whoever Trump puts in as the new Fed chair is going to slash interest rates aggressively. They're telling us the playbook. They're going to cut rates, they're going to inflate asset prices, and they're going to create a massive asset bubble. That's going to be good for us as investors. And I think that as we come along in the cycle, altcoins are going to catch a massive bid as new market participants come into the space. And the reason I feel so confident saying this is because we are about to come into the next business cycle. This is also the earnings cycle. It measures the expansion and the contraction of economies. It's essentially a temperature check on the average investor, the median investor. How much money do they have? How good do they feel about their finances? And essentially how willing or how able are they to invest into different assets? When this starts to pick up, When the business cycle starts to pick up, people have more money to invest with because they have more work. The economy is expanding, and people, as a result, feel more wealthy. It's all about that feeling of wealth and how much money they can afford to invest in different assets. If you have a look at the chart on your screen, this chart shows you the connection between the PMI, which is how we measure the business cycle. This stands for the Purchasing Managers Index. It's essentially a survey they give to the world's largest supply chain managers. It asks them a series of questions, and based on those questions and the answers they give, they get a score from 30 to 70. Under 50 means the economy is contracting, and above 50 means the economy is expanding. Right now, where we are is we're sitting at a 49. So that means we're just below 50. It means we're just barely in contractionary, but we're not really. We're pretty much just coasting. Now, the reason that we're coasting right now is because of tariffs. Tariffs have impacted the exporting and the importing abilities of different countries, and we're seeing that come through in the data. We are sitting at a 49 right now, but once tariff clarity comes, I believe this is going to tick higher as businesses feel more confident about the tariff environment that they're going into, and they're going to be able to begin their growth initiatives. So I've got a clip from one of the Fed governors, Chris Waller. He's actually going to talk about CEOs and their hiring patterns. Have a listen.
Yeah, I mean, when I talk to CEOs, I get the same thing. We're in just hold pattern in terms of certainly the labor market. They're not hiring, they're not firing, they're just watching. And that's kind of what you see in this underlying private sector data. There's not much happening. So it wouldn't take much to sort of tip it.
What it's going to take to tip it is tariff clarity. Once businesses are no longer in a wait and see pattern, once CEOs are no longer not hiring, not firing, once they can begin hiring again, that's when we're going to see the PMI pick up. We're going to see the business cycle start to pick up. People feel more wealthy, and subsequently altcoins are going to perform a lot better. So have a look at this chart that I was showing you earlier, and you can see the connection between the PMI, the business cycle indicator, and others, which is all the altcoins except for the top 10. When the PMI dips, we also see stagnation from the altcoin market. When the PMI rips, we see the altcoin market increase. So we have this right here, we have this connection right here, and then when we have a dip in the PMI, look, we have a dip in altcoins, and then as this stagnates, altcoin stagnates. Why is that? It's because people don't feel wealthy. It's because people don't have spare money to invest. In order to get the crazy alt season that we want to see, we need new market participants to come into the crypto market and start bidding up altcoins to make the price go higher. That's only going to happen once the economy is in an uptick. It's only going to happen once people feel like they have enough money to risk losing some in order to gain some. So aside from tariff clarity, which the Trump administration has signaled could come as soon as August 1st, we also have financial conditions easing. And if you look at the chart on your screen, you can see that financial conditions leads the ISM by about 9 months. And so we see the uptick here in financial conditions. The ISM, as you can see from the past, is very likely to follow. Combine that with the fact that tariff clarity is on the way and that pretty soon the economy is going to be ripping to the upside. I think we'll be looking at a very favorable time for altcoins and the greater crypto market in the short to medium term. And so these two catalysts are really what I'm very excited about coming into this crypto bull run. The central bank rate cutting cycle and the global uptick in the business cycle. These two in connection are going to allow the crypto market, altcoins, and really the wider asset market to explode to the upside. And what's more is that these two are happening at the same time, and that's actually not very common. We can see here in this chart that the share of central banks in net easing mode, the share of countries in recovery or an expansion stage right now are both reading near 70%. Percent of central banks in net easing mode, 67%. Percent of countries in a recovery or an expansion stage, that's an uptick in the business cycle, 76%. And it looks like the trend is to continue going higher, with the Fed set to cut rates, with the United States and really the entire world set to have an uptick in the business cycle as U.S. trade clarity allows other countries to start trading more freely. I think we have a really bullish time ahead of us. And this is just one thing that I'm looking at. The central banks, the business cycle, this is a very big component. These are two major catalysts, but there's actually a lot more at play. And if you want to stay up to date with the developments in the macro world and why I'm extremely bullish, then be sure to subscribe to the channel, give the video a like. We put a lot of effort into this. We'd really appreciate your support, and put a comment down below. Let me know if you've learned anything. Let me know if you're more bullish, and we will see you in the next video.